Yeah, so Raisin is an established financial technology company with customers all over the European Union, the UK, and US. You can see there, marked by our lovely new logo, where we are present across Europe and further afield. We have over 1 million active users worldwide at the moment. We have more than 80 billion assets under management, and to date, we've generated interest of more than 5 billion for our Raisin customers worldwide. So that's just to give you, for those maybe joining for the first time, a bit of a scope of the size and the success, I suppose, of Raisin to date. And with that, I will pass to Jasmin to talk about what's affecting interest rates.
Great, thanks, Eoghan. And finally, it works. Right, so good evening also from my side. Thanks for bearing with us. Thanks, Eoghan, for the intro. So as always, in this first section, I'd like to review the current market environment with you, and look at the impact that the economic conditions are having on our and on your savings options. So without further ado, this time let's jump right into it. So as you know, when looking at Ireland, we're looking at generally the Eurozone, we need to consider the European Central Bank, the ECB's monetary policy. So if you want to understand where the interest rates come from that you as a saver get on your savings accounts and deposits, this is where especially I like to start. So the main tool that the ECB has to control inflation and economic growth in the Eurozone, which is what they want, is their key interest rate, also the policy rate, which you see called here on this slide. So you know this, we've touched upon this also in previous webinars. So when inflation is high, the ECB hikes their key interest rates to make borrowing more expensive for you, for companies, and push people to save more. And this is what also happened when the inflation rose after the pandemic, for example. And when the economy is weak, then the ECB lowers its interest rates to make people spend more, invest, and basically activate businesses. So you can see in this chart the development of the ECB rate in the last few years. You see where it increased the rates to deal with this very high inflation that I mentioned. And you can also see how it decreased rates more recently when inflation went back to the ECB's 2% target. And now, actually, since July, the ECB has been quite comfortable with where inflation and economic growth are. And so it has left its rates unchanged since then. So we will have another rate decision by the ECB tomorrow, actually, good timing. And we fully expect, actually, the deposit facility rate to also stay where it is at 2%. And you see here in the charts, the forecast, our forecast that's obviously also based on what the market thinks. We currently don't expect the ECB to cut or raise interest rates in the next 12 months. So you see the line really flat. But we don't have a crystal ball, of course, so we can do our best to interpret data, but of course none of this is set in stone, especially because there is a lot of uncertainty in the world right now. I'm sure you know about this, and there are certain events and developments that could push the ECB to adjust rates after all. So today I wanted to go through some of the potential drivers that could lead the ECB to actually touch the rates. What all of these things that you see here have in common is that they could impact inflation or economic growth, which, as we just talked about as well, these are the things that the ECB looks at when it sets monetary policy. So the first driver, one of the drivers here, is oil prices. If oil prices fall, and then they have been falling and they're forecasted to fall a bit more, but if they fall substantially, energy costs drop, of course. And energy costs are a big part of consumer prices. And so falling oil prices would directly reduce the inflation rate as well. And so if inflation goes below this 2% target, the ECB could feel the pressure to reduce their key interest rates further. So this is one thing that could happen. What could also affect the ECB rates is, for example, if Germany's fiscal stimulus gets delayed. So the public investment that Germany has planned, a lot of investment into infrastructure, into defense, those are things that are expected to really boost growth in the biggest economy of the Eurozone. However, and there is, of course, always political turmoil, even here, so I'm dialing in from Berlin. However, if this stimulus is delayed, or if, worst of all, it does not happen for whatever reason, there could be a negative growth surprise. And this could be one that could potentially also lead the ECB to cut rates in order to boost investment and consumption to drive this growth that we would not get from the stimulus. Please keep in mind that I'm just playing with a few scenarios that are things that could happen, that haven't happened yet, that there's no need for them to happen, but just to play a bit with some scenarios to get an idea of where we could be headed in any case. And then we have a trade war. So while the tariffs are, of course, already in effect, there is a risk that the impacts will be felt with a bit of a delay, so that we haven't felt it properly yet. So there is still some uncertainty that we will still feel something from this. There is uncertainty on whether there could be this negative effect on growth and inflation driven from these tariffs. And this could also force the ECB to reduce the rates to combat that. Let's move to France. So you have most likely heard about the political mess, pardon me, that we had there. And while things look a bit more under control now, uncertainty is still there, and that still remains. And uncertainty is a killer for business. So it undermines business confidence, it undermines consumer confidence, and that always leads to slower growth. And as you know, disappointing growth can be one argument for the ECB to lower the rate. So if France's political turmoil gets worse, then that could really go against the growth and kind of push the ECB to cut rates. What else is there? You see two more points here. So we also have the exchange rates to look at. We currently have a pretty strong euro. With a strong euro, I mean that a euro is now worth more compared to other currencies, such as the US dollar, for example. And that makes imports for the Eurozone cheaper. So when you're importing stuff, it's cheaper for us now in the Eurozone, but it also makes exports more expensive. For example, if the US buys German cars, that's going to cost them more now. So cheaper imports lowers prices of goods and services, and that will reduce inflation. So it makes everything cheaper, inflation goes down. And at the same time, expensive exports decrease the demand for exports abroad, and that can hurt Eurozone growth because then no one wants to buy our goods and services anymore. So both of these, kind of the deflation, but also the lack of growth, this could be, both of these could drive the ECB to cut rates if the euro strengthens a lot more. And the final driver I wanted to touch on today, also because we received some questions on this, and I will reiterate what Eoghan said. Thank you so much for sending in the questions. So we got a few questions about the effects that the conflicts in the Middle East, but also Eastern Europe could have on rates. So first, and this is a risk that I think we also talked about in the last webinar, there is a risk that oil prices could rise as a result of the war. So far, that has not materialized yet because there hasn't been much disruption there, but also the oil supply in the world right now is pretty ample. And so the likeliness of kind of the war causing a rate hike due to oil prices is very tiny. On the other hand, we have the risk of Russian strikes on Ukrainian gas infrastructure. And this could affect supply, and that could drive up energy prices. And so that could result in an increase in inflation, which, as we know, increase in inflation is an argument for a rate hike for the ECB. So to sum it up, there are a lot of ifs and whens, but to be really honest with you and frank with you, while there is always a risk there, the chances of these things that I just talked about happening are considered pretty small, and they're not part of our base scenario. So we stick to this stable rates forecast that I gave to you just now. But why am I doing this? I think it's an interesting exercise. When you read the news, you read all of this, right? What effect will it have on my savings? This is a bit what we just discussed. I wanted to give you a bit of insight into everything that goes into consideration there. So I hope you stuck with me for this deep dive, because what I want to talk about now is how the current market environment that we just went through affects the savings products that you have access to. So you see here on the left-hand chart on this slide, the number of interest rate changes for products on Raisin. If you've joined us, you may have seen this before. And what is clear, if you look towards the end of this chart, is that with the ECB holding rates stable, the number of banks that decreased the deposit rates really fell and has drastically fallen, actually. And at the same time, looking at the green line there, we have seen an increase in the number of rate hikes on our platform. So the numbers are pretty much even for both now. So you see the dots have kind of aligned. What does that tell us? First of all, that banks continue to adjust rates, but that is not driven by the ECB anymore because the ECB has kept rates stable. It's more driven by the individual bank's needs. So if a bank is looking to attract more customers and savings, they increase the rates a bit. And once they're satisfied with their deposits, with the number of customers, they lower the rates again a bit. And this is kind of this interplay that you see here and why the number of rate increases and rate changes is pretty even. As you can also see on the right of the slide, here we look at the rate changes per deposit category in the last 2 months. So you can even see that on the longer term deposits, banks have actually increased the rates more often than they have decreased the rates for the longer term deposits. That's a sign that they probably have cut rates a bit too much at a certain point. So they went a bit overboard with their rate cutting and are now readjusting the rates to be attractive enough for savers again. Now, what does it mean for the development of the rates that you see on Raisin? So you can see the top interest rates here, which basically represent the average of the 5 highest rates in each product category that you can get on Raisin. And the current rate level is shown here in blue. And in gray, you see where the rates stood at the beginning of the year. And so you can clearly see that the line went down and the effect that the ECB rate cuts in the first half of the year basically had on rates. So they pushed the rates down. But you can also see when we compare it to the yellow line, which is from 3 months ago, that rates actually have recently went up a bit in the last 3 months. So why is that? So part of that is that readjustment that I just talked about, where banks went down a bit too aggressively first and had to come back up slightly to not lose customers. But it's also the result of Raisin growing. So with new partner banks, we're also able to just offer you more rates. It increases the competition a little bit more. We, of course, have just more offers, higher offers, and that's also a bit what's driven an improvement here that you can see there. So that's all on rates. And the final thing I wanted to show you is actually what the savers on our platform are doing with their savings, because you obviously always know what you yourself are doing. But I wanted to show you a bit of an overview of what actually everyone on Raisin is doing. And you can see this here. So this chart shows the distribution of the savings that we received every month across the deposit categories. So you can see it for how it is now in the, let's say, mid blue, and you can see how the distribution was at the beginning of the year in January in light blue. So what's the main takeaway here? So basically, Raisin savers are now really spreading their savings across the categories. So we have seen a reduction in the amount that goes into demand deposits. So beginning of the year, uncertainty was even higher. People were placing a lot of money in demand deposits. Currently, this makes up about a quarter of the orders. So we have seen customers, savers, being much more comfortable with kind of locking in rates, going into term deposits. We've seen a notable increase in both short-term and long-term fixed deposit. And so that's been great to see that users basically are making use of all the options to build up a kind of balanced, solid savings portfolio and also securing rates for a bit longer with term deposits. So there we have it. That's it for market dynamics from me for now. I think we'll hear each other again in the Q&A, but I'll hand back to you, Eoghan, for the next section.
Thanks a million, Jasmin. That was brilliant. And yes, certainly enlightening. And thank you. So, guys, I will be jumping into maybe a little bit more of a Raisin Ireland specific update for the next couple of moments. I think I'd like to start with quite a significant milestone we completed sort of mid to end summer of this year, which was our Raisin brand evolution. I hope everyone on the call here has seen it and experienced it, but it was quite a like I say, a significant milestone for us. The idea here was to, really refresh the Raisin brand, not only from an external point of view from our public websites and apps, but also for the user interface that you guys will be using when you deal with Raisin. So hopefully you'd agree with me that we have a much clearer dashboard. The app, I think, is a lot crisper, is the word I like to use, and just easier to use. What I would say, if you guys do have any feedback on the rebrand or the way things are laid out, please do always feel free to share it with us. Or you can either share it now in the Q&A and I can read it, or later on I'll be sharing the contact details on how you can get in touch with us. But yeah, just thought I'd touch on that because it was a significant moment for Raisin Ireland and Raisin in general. Yasmin, yeah, thank you. I tried to keep the next few slides sort of very much in line with the questions we were asked, and maybe the number one topic that came up is how our savings accounts taxed. In a previous webinar, I did a deep dive into the sort of the implications of saving in different countries around the European Union. I'm not going to do it today because we actually are 2 days out from the 2025 tax deadline, or I suppose interest earned in 2024. Has to be declared by Friday of this week. So it's probably an opportune time to touch on our dealings with revenue. First point is, while some of our partner banks do indeed withhold foreign tax, none of our banks, and Raisin for that fact, uh, withhold dirt tax. So every Raisin customer is obliged to make a self-declaration to revenue a year in arrears from when they earn the interest. And the good news is Revenue recently released a very, very helpful document, which includes a section on how people in Ireland can go about declaring EU deposit interest abroad via the My Account revenue service. I think there's a realization, not only in revenue, but throughout Ireland, that Irish people are looking for savings and investments abroad. More and more, and it's great to see that Revenue were aware of that and created this document. The document itself is called The Taxation of Deposit Interest Income, Source, Rates, Applicable and Reporting Obligations. It can be found on that page there that I have linked, raisin.com dirt tax. But I think the two screenshots here below are important to just show how simple it is to maybe declare this interest. So in your My Account, and just a caveat, Raisin doesn't, we aren't offering tax advice. We don't sort of give you a step by step, but I think this document is certainly worth mentioning. And you can see there the three boxes where you put in how much EU deposit interest you earned, with dual taxation agreements between Ireland and other EU member states. How much did you pay in, for example, Latvia goes into the second box, and then other foreign tax deducted. Or sorry, I correct myself there. What was deducted in a foreign country goes in the third box. They also provided a very, very clear example in the second box here, which shows an Irish resident who earned €100 of interest in Portugal, for example. As it says here, the double taxation agreement between Ireland and Portugal limits Portuguese tax on interest to 15%. Which means if you earn €100 in Portugal, you're liable to, in theory, €33 to pay to Irish revenue. But in fact, you can offset the €15 that you paid to the Portuguese tax authorities at source, which means Irish tax due is €18. And we get a lot of questions in about this to our customer service team about exactly how the taxation works. I think this example is very, very clear. And I would just encourage anyone who has doubts, obviously speak to a tax advisor, but also maybe seek out that document that Revenue drafted, I think in July of this year. It is, to me, very, very straightforward, and they have step by step how to go about declaring the interest earned. So I think it's very helpful. The second most requested question was, how safe are my savings in Raisin? Which is something that we get asked regularly, and very cognizant of the fact to most people, a lot of people, it might be the first time that they're moving their money out of, what would be their main day-to-day bank, which of course would be more than likely one of the Irish pillar banks. It's something I sort of come back to quite a lot. It seems to me when I speak to some of our customers, not only in Ireland but across Europe, that they seem to think that the deposit guarantee scheme is a phenomenon that is specific just to their country. So whether I'm speaking to a German customer, they might think, oh, well, we've got the German deposit guarantee scheme. When I'm speaking to an Irish customer, we have the Irish deposit guarantee scheme. When in fact, that deposit protection is harmonized across the European Union, or the European Economic Area, for that matter, which means that per bank, per depositor, deposits are protected up to €100,000. Which it gives us peace of mind in the sense that whether we're saving with an Irish bank or a bank in any EEA state, we have the same level of protection. And of course, all of the banks on the Raisin platform are members of their sovereign deposit guarantee fund. There isn't one overarching European Union deposit guarantee scheme. I think that can be sometimes a common misconception. They are all managed by their own sovereign members, but our system will only allow you to save up to and not above the limit of the deposit guarantee protection. So none of your savings are at risk in the sense that if a bank, in the worst case scenario, does go under and you have savings in that bank, within 7 days, your deposits in full will be returned to your Raisin account. So just I think it, like I said at the start, it is a very common question we get asked, and I understand why. I think we're all aware of the fact, like I said, that it can be daunting to move your money, but I sort of at any opportunity try to make it clear to people that the protection is not just in Ireland, it's across the European Union. Sort of a Raisin specific thing. We recently hit a milestone in Raisin Ireland that we're quite proud of. We added our 30th partner bank, so we now have 30 banks, all through one Raisin account, offering over 150 savings accounts. So not to go too heavy on a sales pitch, but I think it was a milestone we were all quite proud of. We offer fixed terms from 3 months all the way up to 7 years, with rates of up to 3.10% AER. And we also offer flexible demand deposits. We have 11 of them on the platform. Just this isn't me saying what deposits you should open, but at the moment you can see there on screen some of maybe our top performing savings accounts. And I just want to caveat as well and call out that with Raisin, you'll never be asked to pay any fees or subscriptions to get access to any of our partner banks. Yasmin, I might pause for 2 seconds because I just see there's a couple of questions on the DGS, the Deposit Guarantee Scheme slide. What happens to my deposit if Raisin go under? Well, the good news is that Raisin Bank, which is our service bank, is a member of the German Deposit Guarantee Scheme. So your funds with Raisin are protected up to €100,000 per depositor. So the money in the Raisin account is secured. And in the case of Raisin going under, your relationship would continue with the partner bank, because if you open an account with one of our partner banks, you are a customer of that partner bank. Your money is on deposit with them. And then just to who specifically returns the funds, that is, we have the information on all of our deposit guarantee scheme, the members banks of deposit guarantee schemes. It is the responsibility of the deposit guarantee fund to pay the depositors in that case. And these are all authorized bodies, which you can find information of in our product information sheets with all of our savings accounts. And then just to very quickly, can Canadian tax residents make deposits in European banks through Raisin? Unfortunately not. It is, if you want to be a Raisin Ireland customer, you must be tax resident solely in Ireland. And sorry, last question. Yeah, for a joint account, can you save 200K with all guaranteed? And the way Raisin works, we don't offer joint accounts, so you would have to open two Raisin accounts, and then of course it would be €100,000 per customer per bank.
Great. Thanks for all the questions. Definitely keep them coming if you have any.
Yes. Okay, here is maybe some just general banking landscape updates. So there's been a new rollout of a verification of Payee, which I'm very much in favor of, to be honest with you. I think it's a nice feature, but it will have maybe an impact. Maybe a lot of you on the call here have experienced this already. It was released on the 5th of October by many of the European banks, including the Irish banks. And how it works is when you go to transfer money from your account to any other account and you put in the recipient. So, for example, if Eoghan O'Hara is sending money to Jasmin, if I put in Jasmin and I spell her name with a Z, I will more than likely get a close match message, which would sort of prompt me to check that my details are correct. If the name is perfect, it's a match, and it all goes through. No match, the name doesn't match at all, and not possible, it means your bank can't check it. Now, important to point out here, a close match or not possible does not mean that your transfer won't work. It's the bank's way of trying to get you to pay a little bit more attention to what you're inputting, and essentially it's a fraud prevention step, which I think is always welcome. The reason we're mentioning it on this call is we've had a number of queries to our customer service team about this, that people are um, using Raisin or Raisin Bank as the recipient when they're transferring to their Raisin account. And I think it's important. The question that was just asked about what happens to my savings with Raisin, if Raisin goes bust, well, a Raisin Bank IBAN is your personal IBAN, which means that it's your money secured with Raisin Bank at any given time. So when you're making a transfer and say you decide to open a savings account with one of our partner banks and you need to transfer money from your nominated account to Raisin, please ensure you use your own name and not Raisin or Raisin Bank, because yes, you are transferring the money to Raisin or Raisin Bank, but you're transferring it to your IBAN with Raisin Bank. So just this was just an information page to make people aware. And maybe if you're getting spooked by seeing a no match when you're trying to transfer to Raisin, please make sure you're using your own account name. Now, leading us nicely on, I think, to banking safely online. I think this should be and probably is front of mind to anyone who is banking online, anyone who is shopping online, and all of the endless possibilities for fraud and scams. The reason I include this slide is Raisin, of course, is not full, is not alone in the banking market, where of course people will try, bad actors will try to defraud people using Raisin's name. And I think it's important for us to maybe just remind people a little bit of how to look out for these scams and understand that, who is Raisin and who isn't Raisin. So I've sort of tried to split it into 4 points here. First one, very simple. We will never ask you for your money. We will never call you, email you, and say, hey, here's a great offer. We think it would be perfect for you. Send 100,000 euro to this account. That's just not how it works. I think most of you in the call have hopefully gone through the process of opening a Raisin savings account. It's very much the onus is on you as the customer to choose the savings account, to fund your Raisin account, and get that savings account open. So all transactions are made by you. Raisin will never call or email to convince you to open a specific product or make a transfer. And like I say, Raisin is a self-service platform, meaning you decide what account works for you. And very importantly, all of our offers are visible on the public website, and I'll get to why that's important in a few moments. Your security, your control. Ultimately, we have a customer service team, and we are very much there to help you guys with any concerns or doubts you have. But the best way to not fall victim of fraudulent activity is to spot it early. Only you can withdraw funds to your Raisin account. Customer service cannot move money on your behalf. So once again, if someone contacts you saying they can, that is not true. Your Raisin IBAN is unique to you. Like I said on the last slide, it is your IBAN at Raisin Bank. And I would always encourage people, if they're unsure, if they're making their first transfer to Raisin, you can send as little as €1 as a test transfer to see if it gets to your Raisin account. And that's just ways of maybe, if you are a little bit unsure or have any doubts, of giving yourself peace of mind. All of our transactions are backed up by two-factor security. If you want to withdraw money or lodge money to one of our partner banks or open a savings account, you'll be prompted to enter a verification code, which will be sent to your mobile phone. And they're system generated. No customer service agent will ever provide or request one, and nor should you ever share a verification code with anyone else. And recognizing scams, one that we have seen, and luckily, our customers have been savvy enough to get in touch with us about these, is people claiming to be someone they aren't and offering returns that are too good to be true. So, for an example, a few months ago, we had someone impersonating a Raisin staff member claiming to be offering 6% for a 1-year deposit, and that if you sent 30,000 euro to this IBAN before close of business, you would be one of the exclusive customers that would be lucky enough to get this offer, which is why I go back to all of our offers are visible on the public website. There is no hidden offers in Raisin. There's no sort of, lucky, limited time offers for lucky customers. It is what it is on the website. If there's any unusual account requests, never open or fund accounts outside your own Raisin account. Look out. This isn't specific to Raisin, but look out for poor communication quality, so spelling errors, strange senders or emails, or fake websites for that matter. And the most important one, unprompted transfer requests. Never ever act on the request of an unsolicited email from anyone claiming to be from Raisin. If in doubt, call us using the phone number on our website. And I think that's also important too. Make sure if you are going to call us to confirm something, get it from the website. Don't take it from any other source other than the Raisin website. Yasmin, I might pause there. That was a pretty
Yeah.
text-heavy slide and answer a couple more questions that have popped up in the chat.
So we have one maybe
Yep.
that's been sitting there for a while.
Yeah.
Someone asking, in the event of an investor's death, are the funds
Hmm.
invested immediately available, or must the term take its course?
No, so the term doesn't have to take its course. There is, of course, steps to go through, but providing the required paperwork to release that form, to release that term deposit. But our partner banks, it is in the terms and conditions that in the event of a person's death, it will be paid out to their next of kin. That is one of our T&C's terms and conditions that is common across all partner banks. So no is the answer to that. And then yeah, look, we will be moving to Q&A soon, so we might keep the rest of the questions in the chat until then. But just a couple of things here, which goes back to sort of my preventing scams and fraud. We do have a very easily easy to contact customer service team. So there's a number of ways you can send us a message to your Raisin account on your app or on your desktop. You can call us Monday to Friday, 11 a.m. to 3 p.m. Irish time. The number is on screen. You can email us at contact@raisin.com. We do have a very deep library of FAQs. If you don't fancy speaking to someone and you want to try and find the answer yourself, there is a number of questions can be answered in the FAQs. I would encourage, if you haven't, to turn on the notifications in your Raisin app or on the desktop on your laptop or whatever. That'll help you keep up to date with what we're doing in Raisin, new partner banks joining the platform, and a lot more. If you haven't downloaded the Raisin app yet, there is a QR code if you want to scan that while it's on screen. And I'll maybe a cheeky call out for our refer a friend program which we run, which means if you're enjoying Raisin, of course, and you feel like telling your friends about it, then you can get €50, and if the friend meets the terms and conditions, they can also receive €50. So look, guys, that is it from the Raisin Ireland updates. We'll move into the question and answer section. So thank you for bearing with me.
Thanks, Owen.
Okay, Yasmin, I think these questions on screen are going to be for you. Um, can you tell us a little bit more about, will interest rates across Europe hold at current level for the next 2 to 5 years?
I would love to say yes, but unfortunately, I also cannot predict the future. Um, I mean, we've talked a bit about it before, right? All I can say is that given everything we know now, everything we see now, currently there is really a little argument for an increase in rates or a decrease in rates. So for now, we're seeing a hold. But we discussed all the variables, not all of them, a few of them before. We talked about a few drivers. There are developments that we have not even listed, that we probably haven't even thought about yet, things that can happen, that can influence the course, right? So for now, we expect rates to hold, but I cannot predict where we'll be in 2 or even 5 years. That's unfortunately the answer I have to give here. But the forecast for the next at least 12 months on our side is that we will see basically interest rates hold.
Yep, thank you very much. Another question is thinking of investing in Baltic Bank savings account in the event of Russian interference in the region. I suppose the question here is there any danger or implication?
Yeah, so I think there's two things we can talk about here. First thing is there's a DGS in place, right? So the DGS system works. We haven't seen it not work really. And even your let's say deposits in these places are basically guaranteed up to 100,000. And obviously you should never go above, or we don't recommend to go above this limit also. So that is in place. The second thing is we can look at Ukraine, for example, at Ukraine's banking sector and what happened there after the attack. So actually, despite the war, there were not any bank runs. The access to cash in Ukrainian banks was maintained even during electricity blackouts, during all of this. The banks there have a strong liquidity and capital buffers, so we didn't see a negative impact on the banking sector actually. the banking sector reacted really well. The National Bank of Ukraine reacted really well. And I think what is the positive here is that I think by now, banking sectors, national banks are prepared for these eventualities, right? So they will have contingencies in place, they will have emergency systems to keep the banking sector afloat, to keep kind of banks running even in the event of this. So this is what I can tell you here. This is what we can draw on, which is only, of course, experience. We never know, but for now, at least on my hand, I can tell you that I have some funds with an Estonian bank, and yeah, that's despite the kind of risk in the bank.
Yeah, I think people can probably, and maybe it's the wrong turn of phrase here, but take heart from the fact that with all that's gone on in Ukraine, like you just mentioned there, that the banking sector did remain resilient. But of course, yeah, it's something to keep an eye on.
Yeah.
Um, Next one for you is, do you anticipate interest rates rising over the next 6 months? This person is hesitant about locking up their money away for maybe 5 years if there is a likelihood that rates will go up in the short term.
Hmm. So a very good question, Mary. I know this question comes from you. You sent it in. Thank you so much because it's a question that I've gotten so many times, and it's such a valid question. So let's look at it from the two ways that you put it here. So do we anticipate interest rates rising over the next 6 months? No. So generally, we expect the rates to be stable. That doesn't mean that on an individual bank level, rates might go up a little, but we're not going to see a huge difference in the next 6 months at least. So you're not going to see 4% rates coming in now. So at the same time, could rates fall substantially in the near future, and you could lose out by not taking the longer term option right away. We also don't see massive shifts there, although the likelihood of rate decrease is a bit higher than is higher than at a rate increase. Sorry. What does that mean for you? I think, and this brings me also to the last question that we have here, which is what is the best strategy? How should you invest? How should you place your, be it 10,000, 30,000, 100,000? We've received all of these questions. So I think, and this obviously depends always on the specific person, on your financial needs. If you're unsure about locking in rates, spread it. I think that's the way you're gonna feel most comfortable. So you can put a bit of the money into a short-term offer. If it's a really good rate, I think if it's the welcome rate that maybe you might have seen for the demand account, we're probably not gonna see a much higher rate like this in a while. But spread your money. So put a bit into the short-term account, put a bit into a mid-term account, put a bit into a long-term account, and that way you secure interest rates for a long time and for a mid-time. But you also have a bit of flexibilities in the short-term account that once that one matures and you get that money back, in the event that interest rates have gone up, you can reinvest with a higher rate. In the event that interest rates have fallen, you have a portion of your funds also in a longer term deposit. So we call this the ladder strategy. And this is something that I recommend if you're unsure. Think about how much do you need right now, put that in a demand account. If it's something that you might need quick access to where you need flexibility. However, anything that can be placed in a bit in a fixed term account, spread it, unless you're really sure you're not going to need it for the next, let's say, 10 years. But I think spreading it, reinvesting it periodically is a good way if you're unsure.
Mhm. Yeah, thank you. And just sorry, you mentioned the Raisin starter account. We have a question in from a customer who feels it's a little bit unfair that it's only for new customers, and you have my sympathy. The decision wasn't taken lightly. What we are trying to do is there is just so many customers who haven't heard of Raisin, haven't heard of the fact that there is better ways to save out there, and what we're using this account for is to try and get more Irish people to be alert and aware that there is better places for their savings than sitting in little to no interest accounts. So look, my apologies, it's not for current customers, but that isn't to say you will be neglected. We are always thinking of ways to thank and thank people for their loyalty. So I would say watch this space for what's to come. Now, back to you, Yasmin. Apologies. Um,
Thanks. No, but that was it. I just wanted to quickly go onto one of the chat questions. Apologies, and then we can jump to your questions. But someone asked, can you have 100,000 euros in several different sub banks? Yes, definitely. So if you have more than that to invest, it's also recommended. If you just spread it across banks, you can, with a maximum of 100,000 in each bank, you can definitely spread your savings there, and diversify.
mhm.
And they will all be, of course, secured up to 100,000 in each of the banks. And with that, I'll move over to a bit more Raisin focused questions. So we have a question. I want to open a saving account that I intend to show a bank as my proof of savings for a mortgage. What type of account would that be?
Yeah, well, look, I think, Yasmin, as we all know, if you're saving for a mortgage, inevitably you will need that money, hopefully in the short term. Then again, with the way things are in Ireland, maybe it's a little bit longer than you'd like. But um, I think the last thing you want to do if you're saving for a mortgage is to lock your money away for a period and not be able to touch it. So I would recommend one of our 11 demand deposit accounts, which allow you to top up and withdraw whenever you want. Of course, the interest rate can change, but it does give you the flexibility when and or if and when a property that you'd like to purchase comes available, you can get access to that mortgage deposit, which I'm sure is what you're saving for. And best of luck with it. I would also say with Raisin, you're saying you want to show it to your bank, you can automatically download statements from that savings account in your Raisin account to show to your bank. So in to summarize, demand deposits would be the one there.
Great. The best rates available in Ireland. Are we allowed to save in English banks?
Yeah, well, the best rates available in Ireland is an interesting one. I'll be honest with you, I'd be very confident in saying that Raisin are offering across most terms the most competitive rates. But you can do your own research. You can go to the Raisin website and look at the savings that we have. You can also there's some great resources. I know the CCPC have their own independent comparison tool, which is not just Raisin. So you can go and actually, put in how long you want to save for, how much you want to save, what type of savings account you want, and it will give you all the options in the market. So that's a good place to go for that. Are we allowed to save in English banks? I can only speak from a Raisin point of view here because I'm not really sure on the policies of many, but I'm sure it's industry wide. If you are a tax resident in Ireland with Raisin, you cannot save with our Raisin UK platform. You can only save in Ireland. So it is on your tax residency where you can save. Once again, disclaimer, I'm not speaking for every bank in the market there. That is a Raisin answer.
Great. If I renew my deposit account, will my interest be transferred to me on the maturity of the term account?
Yeah, that is a very good question, and brings me to a point that I always try to make to people is we try to give you as much information on the account either you're opening or the account you have opened in your Raisin account. So that will be in the deposit details section of your Raisin account or in the product information sheet. In most cases, if you decide to renew, um, the interest will be paid to your Raisin account. But if it's under the deposit guarantee scheme limit, you can roll it over and pay it into the new account. I would really encourage you to check the product information sheet at least a couple of months before it's maturing. Um, like I said earlier, Raisin is a self-service platform. You can decide to renew your deposit or not renew. It's entirely up to you. But once you give yourself enough time to prepare and do a bit of research, you'll know exactly what's going to happen at maturity.
Good. We have two left. We also have a lot of questions in the chat. So maybe also to get ahead of this, since we only have 10 minutes left, please, if we don't answer your questions, we will get back to you privately also. So don't
Absolutely.
fret. Let's quickly continue with the ones on the slides here. So what's the potential for an AI agent to continually optimize my savings?
Yeah, interesting one. And I'll start from the Raisin point of view. Raisin has no the whole ethos of the Raisin platform is we try our very best to bring you banks from across Europe to allow you to make an informed decision on what you want to do with your hard-earned savings. So we will not be introducing an AI agent who will continually optimize your savings. That's for sure. but then that leads me, Yasmin, into a very interesting topic of AI for financial advice, which people are doing increasingly. My advice for that is, and I'm absolutely not an AI naysayer. I oftentimes will use AI in my day-to-day life. I think it's a wonderful tool, but for any financial decision, I would lead the AI. I would not let the AI lead you. So go armed with the AI, knowing what you want and what you can afford and what you're capable of doing, and don't just go into an AI tool. And I'm not claiming, by the way, that the person who asked this question is doing this, but AI can be a wonderful tool for certain things. But if you're asking it financial questions, be sure you know what you want. Because if you think about it, if you compare an AI to a traditional financial planner, a financial planner will sit in front of you and ask you and understand your specific situation. An AI tool maybe can't do that to the same degree. So for major financial decisions, I still think that going to a financial planner is the way forward. But like I say, you should lead the AI. Do not let the AI lead you.
And then the last one, and fully agree, by the way, with that
Good.
assessment. I
Good.
also love using AI, but I think it's when it comes to finances, I think there should be a healthy mix of our
Hmm.
brains and using AI. So for
Absolutely.
the last one here on the slide, are we fighting a losing battle trying to grow wealth via the banking system?
Yeah, I actually put this one last because I think it might not be the last question we take this evening, but it's an interesting one. First and foremost, with my Raisin hat on, I would say it depends what bank you are trying to build wealth with. Like I say, we are giving through one account access to 30 banks, but it is a very good question because I think it goes to the behavior of what, and I don't like to generalize, but the stats are there. What a lot of Irish people are doing, they've built up wealth and they are leaving it sitting in low to no interest returning deposit accounts. We, for not a second, Yasmin, are saying that people should keep all of their savings in deposit accounts, but there should be a healthy mix. A good financial plan will oftentimes be made up of investments, whether that be in specific stocks, whether it be in tools like an ETF, and savings. So if you're fighting a losing battle to grow wealth, I think the question should be, um, what stage of life are you at? How are you planning to grow wealth? What are your financial goals? And I know these things might sound boring to people, but they are the foundations of creating a good plan. And your attitude to risk is very important. Will a certain investment keep you awake at night? But bringing it back to basics from our point of view, if your money is in a bank, is it in the right bank to be earning a significant, or sorry, an acceptable amount of interest with, at the very least, be beating inflation? And I think for a lot of Irish people at the moment, the answer to that question would be no, it is not. Should we take a few more here from, we think we have 5 minutes left. So,
Definitely.
and sorry,
Let's try.
just before we do that, I think, yeah, if guys, we don't get to your question, please do send an email either through the link,
Mhm.
the Zoom link, and we'll get it, or send it to contact@raisin.com and send it for the attention of Eoghan O'Hara, and I will certainly get back to you. But
Thanks.
yeah, if you want to pick a few.
Right. Let me start with one of them, and then we can ping pong a bit. So, someone just asked a bit, how concerned should we be about the S&P rating of banks when considering which banks to invest in, since other banks with lower ratings seem to have better interest rates.
Mhm.
So S&P rating here, the participant is referring to the credit rating for the country. Of the bank where the bank is residing in, basically. It's a good observation. So banks with from countries with a lower credit rating sometimes tend to offer higher interest rates, but that doesn't mean that they're inherently riskier. So I just want to make that clear. The deposit guarantee system is true for all of the offers that we have on the platform. They're all covered up to 100,000 euros. And it's a harmonized scheme, and there's equal protection across the entire EU and EEA, actually. So why do these banks offer higher rates? So that has to do, one, with, for example, let's talk about Italian banks. The interest rate environment in Italy is much higher, for example. So Italian, let's say, native savers will also get higher interest. So Italian banks are also more accustomed to that. But obviously, the credit rating speaks a bit to kind of the credibility or the that's the financial health of the country itself, which is not directly linked to the deposit guarantee system, even though that's upheld by a specific country. All of this to say that I think if you just inherently, and this is what Eoghan has said before, if the credit rating, even though the deposit guarantee scheme is there and is true for all the countries, if it still makes you uncomfortable, the most important thing is that you feel comfortable with your savings. So if you feel more comfortable placing your money with a higher rated country, do that. But generally, it doesn't speak to the riskiness of the bank itself, and that's also very important to note that the credit rating has nothing to do with the bank itself. It's a whole credit rating for the country, speaking to many other things that have nothing to do with the deposit system.
Yeah, indeed, very well answered, I think, Yasmin. And yeah, just to hammer home that again, that sentiment of if it's not something you're comfortable with, um, maybe look for a different bank that you are comfortable with. Just in the last couple of minutes, we have new to this, so Raisin is a bit like a broker to various sub banks. All your dealings are via Raisin, exactly. So, as opposed to going out and opening 30 current accounts to get access to 30 bank savings products, you open one Raisin account. You choose through the offers of our partner banks and select the account you want, the savings account or accounts you want to open. All customer service, all account statements, and everything else are managed centrally by Raisin. So we do not expect our customers to go and try to make contact with banks in Latvia or Sweden or wherever they decide to save. Um, Let me see. Do you have one there, particularly, Yasmin, that you'd like to answer before we finish? There's just one. It's a tax question. After investing, if I reinvest my money in interest earned, do I need to declare this to revenue? Uh, I'd be, I would encourage you to reach out to revenue or a tax advisor on that question. To be honest with you, I think it's something that maybe a lot of people aren't aware of, but it is then it depends on how revenue see that as earned income. But my inkling would be yes. So I would encourage you to reach out to revenue on that one.
Maybe one that I can answer here. Are there any currency implications if investing in non-euro based countries, for example, Sweden? So if you choose a Swedish bank, the deposit is still gonna be in euros. So you will still be basically placing a deposit in euro. You'll get your interest paid in euro. So there is no currency risk there. I think the only place where the currency here makes a difference is that a deposit guarantee scheme of Swedish banks is held in Swedish kroner. However, we don't allow you, or we've set the ceiling of maximum investments in a way that there is basically no risk of you overshooting the Swedish kroner coverage with your deposit. So here you're on the safe side. And as I said, the deposit and the interest will all be in euro. So no currency risk on your side.
Yeah, fantastic. I think that's pretty much us for this evening. I would just like to first of all thank you, Yasmin, for joining and giving us those insights. I think hopefully everyone took something from that. And then thank you to everyone who joined and for bearing with us for an hour and at the beginning of that hour with the technical problems. So just to echo once again, any questions that weren't answered, please do send them to us through the feedback, or you can contact us through your Raisin account or at contact@raisin.com. Yeah, like I said, we've got a lot of exciting developments coming on the Raisin Ireland platform, so keep your eyes out for that. And yeah, hopefully we'll speak to you on our fourth and final Raisin 2025 webinar. Uh, Christmas at the end of December. Maybe we'll kick off 2026 with a bang, Yasmin, and do our next one in January. But look, thanks again, folks. Really appreciate you joining and enjoy the rest of your evening.
Thanks a lot also from my side. Have a good evening.
All the best. Bye bye.